I'm Tony Sargent from Prudential Douglas Elliman in New York City, and this is Sargent Luxury Homes TV. Today we're going to talk about the market, the Manhattan market. Let's look at the specifics. For the second quarter 2010, here's the bottom line. We had a sharp increase in the sales volume, we had a lowering of inventory, and we had a stabilizing of prices. Getting into the numbers, the average price of a New York apartment in Manhattan for the second quarter of 2010 was approximately $1.4 million, and that was an increase of 9% over 2009. So that's great news. Also, the average price per square foot. Now, this is important to look at because the price per square foot sort of takes out the different sizes. If we're selling larger apartments now, average price is going to go up. So the average price per square foot came out at $1,051 a square foot. Now that's about where it was a year ago. It's about where it was first quarter. So we're seeing a sort of stabilization of prices there. And that's good to see. The volume of sales, how much did they increase? They increased 81% over 2009. That's a huge jump. We also had a decline of inventory of 13% in the overall market. So last year we had studios, one bedrooms and two bedrooms and things under $1 million, making up a large share of the market that was selling. This year we have bigger units and luxury product that's selling more frequently, and so they've taken a bigger percentage than they were of the market than last year. That automatically is going to raise your average price point. So that's why it's important to look at the factors of median price and price per square foot, because that gives us a sense of what's the overall market doing. What was interesting to note was discount from last asking prices. So when a contract was signed, what was the last asking price? What's the discount that the seller and buyer had to negotiate? And that number was actually up the second quarter over the prior quarter. Now, there's a couple factors there. One could argue that, well, sellers are holding on to their prices and buyers are having to negotiate, so there's a little disconnect between the buyers and sellers. The other side of that is, if we're looking at larger units, the larger units seem to have had larger percentage discounts. The luxury market in the second quarter, the median price was $4.1 million. That was an 11% increase over 2009. The average price per square foot, and this is something to just take a look at, was $1,843. So your average apartment in Manhattan, your average price per square foot is $1,051. Your average price for a luxury apartment that's in the top 10% of all sales, $1,843. Now, prices range from $1,500 all the way up to $4,500, $5,000 a square foot for luxury products. So just bear in mind, there's a wide range there. So looking at a segment of the market, for example, the loft market, there was a huge pent-up demand because last year from January through June there was very little activity in the loft market, and those are generally priced between $2 and $4 million, and that was significantly impacted by the loss of Wall Street jobs and lack of large bonuses last year. Well, in the loft market this year, there was a significant increase over 2009. 264% increase over 2009 and 45% increase in the number of sales over the first quarter of 2010. I had clients buying lofts in Tribeca, for example, which is driven in a large part by Wall Street buyers, in April and May and March. And there were very few apartments coming on the market, so inventory was really tight, especially in the three-bedroom loft market. And as soon as those 3 bedrooms were coming on the market, they were getting snapped up. There was a loft that went to contract around $2.8 million. Very similar loft, 2 floors up, had closed in December for $2.25. Huge jump in the number there, and that was a multiple bid that had 9 offers on it. So I think that was very specific to that segment of the market and in that location at that time. You know, can that be sustained? That's a question mark, because what we're looking at is a very busy, normally spring period that we had this year versus a year ago where everything pretty much was on hold in the $2 to $4 million price point. So that's just something to keep in mind. I think it's significant that there was a huge pent-up demand, prices had come down, mortgages are easier to get at higher numbers than they were a year ago, and Wall Street is starting to rehire. Bottom line, the market was stronger. I see more buyer activity out there. The biggest issue that we face is tight inventory with the number of sales that went into play, with sellers who bought maybe, let's say, 2, 3, 4 years ago, not necessarily, especially in the new developments, not necessarily being able to clear the numbers that they need to break even or make a profit. A lot of people are perhaps holding their properties off the market at this point. As a result, that's causing lower inventory and tight inventory for really great properties. which is putting pressure on buyers to sort of step up to the plate quickly, make an offer, be ready for a multiple bid, and go to contract. If you're looking for a Manhattan apartment, send me an email, tsargent@element.com. It's right there on the bottom of your screen. I'd be happy to help or answer any questions you have. I hope this has been helpful to you. This is Tony Sargent at Prudential Douglas Elliman in Manhattan. Thank you for watching Sargent Luxury Homes TV. Have a great day.